And Peter, looking at this, does this have the signs of a market that is starting to unravel and unwind?
I wouldn't necessarily call it unraveling and unwinding. I think what investors are starting to realize is for many years now, investors have paid up for free cash flow growth in technology-oriented companies with low interest rates and high multiples. And on the back of COVID, where those companies are the only ones that were growing, investors are now see an end to that. They see a vaccine. They see reality actually coming back to the markets. And investors are looking at valuation differences and saying, these differences are just too large. And you can't.
That's what I mean, though.
So I agree with
the
you.
Thesis that has really powered things, right?
Yeah, but when I was pushing back on unraveling, because I don't think these companies that are the technology companies that have been growing fast are going to stop growing. I actually think they're going to continue to grow. This is a multiple shift. And so at the end of the day, do I think that the traditional manufacturer is going to grow faster than the tech company? No. But I do think the valuation differences are going to be adjusted. And that's what we're seeing right now.
That's all that matters when you're an investor. It's what the market is willing to pay for things. You think that this is all of a sudden game on for value stocks again across the board?
Yeah, I think, there's no reason to think otherwise. Now, how long is that going to persist? That's an interesting question. And that gets into, what does the next administration do? What does Europe do? Do we see infrastructure spending? Do we see stimulus? Do we see inflation? All those things have to happen in order to create a CapEx cycle, which would drive value for a longer period of time. Right now, we have a shift that may not last that long. But if we have follow through in CapEx and in fiscal spending and some inflation and interest rate rises, you're going to see a long-term capital expenditure cycle that will drive value type stocks.
So what would you be doing right now? Is it something that you look to the U.S. and think that this is a big deal, or do you kind of look beyond? We've had guests this week who have told us they think multinationals will do very well and companies that are overseas versus here in the United States.
I think the traditional thinking is that in these kinds of environments, those economies that have been lagging will speed up. And the economies that have been lagging have been Europe and the emerging markets. And the U.S. economy has been very strong through all this, and it's likely that it's not going to get that much stronger. As part of the U.S. economy or the valuation shrink, i.e. multiples come down, other multiples will rise, but the net of that may not be as powerful as what we'll see in Europe and emerging markets. And so people are looking at allocating capital to global investors or allocating capital to European investors or allocating capital to emerging markets, because that's where you're going to see the effect of this.
Shepard Smith here. Thanks for watching CNBC on YouTube.